Support and resistance can be absolutely awesome for trading, but the problem is that so many people use them in the wrong way, and it ends up costing them so much money over the course of their trading career. In this video, I'm going to explain the key mistake that so many people make when it comes to support and resistance, and I'm going to show you how to correct that mistake so you can avoid a lot of unnecessary losses. Now, if we do like a nice simple Google search about support and resistance, we can see that it just seems like a very easy thing to do in the stock market. We could see by, the quick Google search that, the stock ends up bouncing perfectly off support and it gets rejected perfectly off resistance. And we could go through countless examples of how easy it seems, but in reality, this is not how the real world or the real market is. We almost never see absolute perfect rejections off resistance and absolute perfect bounces off support. And because of this, because of how easy it seems to trade off of support and resistance, when people look at real charts, it can end up causing a lot of confusion and a lot of unnecessary losses. So that's what we're going to fix in today's video. So the first thing I want to say is that when it comes to support and resistance, you cannot think of support and resistance lines as set price points. If you look at support and resistance and you just think it's like the stock is going to magically, perfectly reject off of that level, that is not good at all. It's like trusting your dog with a beef sandwich right in front of its face. Like, you don't want to be trusting in that. Like, it's just not a thing to do, right? But the main thing is, like, when it comes to support and resistance, like, you have to treat all levels kind of like an area, right? It's not like if there's resistance at $200 a share, it's not like we're always going to see a perfect rejection off of $200 and then straight back down. A lot of times we get like little pops above the resistance line, but then it ends up getting rejected. So for example, let's say we look at Tesla stock and let's say we have a key resistance right at $200 a share, right? If we go back throughout Tesla's price action, we can see that Tesla, for a second there intraday, it broke above this $200 resistance point, but it ended up really not breaking through it, if that makes sense. So it's like, if we look at it on a deeper scale, you can say, we can see that Tesla had resistance, right at $200 a share. And on the 1 minute chart, it broke above that, right? And if you were just someone who followed resistance, in a very specific way, and you did not treat it as an area, this is what would have ended up happening. You would have saw the stock Tesla break above $200. You would have bought, shares of Tesla. You would have bought call options or whatever, and then you would have saw it break below that, and you would have cut losses. And then it, quote unquote, broke above that resistance again. You would have bought into it, and then it broke below it again. And then it broke above it again, and then it broke below it again. And you would have kept getting faked out and faked out and faked out. And it would have happened multiple times, and you would have just been sitting there stressed out and pissed off because every time you buy the breakout, it gets rejected. Where in reality, if you were using support and resistance the right way, you would have never gotten like faked out to begin with. So looking at Tesla chart, whenever you are looking at any chart or any support and resistance level, it is absolutely crucial that you treat support and resistance as an area rather than a specific level. So for example, when I'm looking at support and resistance, like, yes, I'll look at the resistance point, whether it be $200 or, $180 or whatever the price point or the level may be, but you have to treat that as an area and give it some wiggle room. So for example, with a stock as crazy as Tesla, we all know how volatile and how big the moves are with this one. So it's like you have to give it, maybe 50 cents, maybe $1 wiggle room, depending on how crazy the stock is at the time. A lot of people will say, all right, Mike, you say you have to give the stock wiggle room, but how much wiggle room for these support and resistance levels? And it all depends on the stock you're trading. For example, if you're trading a stock as crazy as Tesla, you have to give that a lot more wiggle room with support and resistance compared to a stock like Coca-Cola that barely moves at all. You know what I mean? So keep that in mind. And what can also be extremely, extremely beneficial is waiting for confirmation, right? So if we look back through this Tesla example, we can see like it broke, like it really didn't break resistance, but if you tried to say it did break above resistance, there were no real confirmation candles through that resistance break. Like, for example, yes, it broke above $200, but it barely stayed above there at all. Like, it couldn't even hold this level at all. So it's like anytime it got above 200, it just got rejected a couple minutes after. So what I like to see a lot of times are actual like successful breakthroughs above the level, and that's what I'm going to cover right now. So if we look at a stock like Coinbase, for example, and let's say we go to a daily chart, and let's say we saw strong resistance right around this like $41 level, right? $41 a share was resistance. We can see that earlier in the day for this stock, it struggled to break above that and it got rejected, right? But as the day went on, right, it slowly got closer and closer to resistance and it ended up breaking through that. So that's awesome, right? We ended up seeing a breakthrough. But just because we saw one minute candle that closed above the resistance level, that doesn't mean we want to necessarily jump in and buy call options or buy the stock. We want to see some confirmation. We want to give it some wiggle room, right? So as the minutes went on, we could see that, coin stock successfully held above the resistance level, which is a good sign. It started running up to the point where it's like, all right, that's enough wiggle room. But at the same time, like all of these candles that were consistently above, this resistance around $41 is confirmation. Like the stock broke above resistance, but it was also holding above resistance for some time, right? Where if we go back to that Tesla example, any single time the stock was above resistance, it got rejected minutes after. So it's like, this is the key difference that you need to look out for when you're trading, breakout resistance trades or even like support dip buys or support breakdowns or anything like that. Like you have to give the level some wiggle room, but also wait for confirmation to make sure the stock is actually, has a decent chance of holding above the level it just broke above. So definitely keep that in mind. And while we're looking at resistance trades, the same thing works for like dip buy style trades. So if we go to like QQQ, and let's say we see a key support level at $260 that has been, that has existed for years. And let's say we look intraday with this one, you'll see exactly what I mean in just a second. So like, let's say we are looking at QQQ and we go to this point right here towards the end of December of 2022. And let's say you're looking at QQQ and you're looking to dip buy it because $260 has been a very consistent level of support. You're looking to dip buy that support level and ride the wave back up, right? And let's say you buy somewhere in this like yellow square, you can say. Now, the thing is, if you buy somewhere in this yellow square, and then if you were to treat support and resistance as like a very specific level, like if QQQ breaks below $260, I'm out. That would not work, right? Just like we talked about in the beginning of the video. Like you have to give it some wiggle room and you have to wait for confirmation candles. So if you got in somewhere in this yellow square, a couple minutes later, you would have gotten stopped out as the stock technically went as low as around $259.74, right? And the support level is around $260. But if we look closer into this example, we can see that there were no real like confirmation candles with this breakdown, you can say. It's like the stock was just straddling that $260 level, but we never actually saw like a powerful candle below that level, which indicates like, look at, like, yes, technically it's a couple cents below the $260 support, but it's like, really, it's not, it's just lingering around support right now and it's trying to hold it. So like that would have, like, that's why it's important to, treat support and resistance as one areas rather than specific levels, but also to wait for confirmation candles. It would have been a completely different story if, like, where we had this candle right here, right where my cursor is if this green candle would have never happened. Like, if it was just like another deep red candle, that would have been a different story and you'd probably want to cut your losses. But that's not what happened. And if we add a couple other important things to the chart, the same thing goes for like taking profits. So, for example, like I said, if you got in this QQQ dip buy trade somewhere in this yellow square, your stop loss might not be at the $260 support. It might be like at $259.50 or $259.54 or something around there, where it's like, realistically, if the stock got to that level, it probably broke below support, So that's what I like to do, and it definitely would have saved you many times through many trades throughout any stock chart, basically, any stock's history. And the same thing goes for profit targets. So You know, like let's say you saw some key resistance around $264 a share, you know, you might set your profit target not at $264, but maybe at like just somewhere a little bit before that, like maybe $263.83 or $263.90 or something like that, because in the same way, you know, for breakouts and breakdowns with support and resistance, you see the same thing with like rejections for stocks you're already in. So it's like, if there's resistance at 264, that doesn't mean that the stock has to hit 264 before it slows down. It might slow down at 263.90 or something like that, because resistance and support are areas, and they don't work perfectly every time like you see on Google, where it's super predictable and it's all sunshine and rainbows. The real world's not like that, and you have to be prepared for that. And like another example is like if you had, you know, let's say you were trying to scale out, right? And your first profit target was around 263.83, and your second profit target was around 266, like 65. You might have seen resistance around the $267 area, but you put your profit target at 266.62. You know, it goes to the same exact point I just talked about with the original profit target, and why you have to be prepared for, I guess you could say, rejections before the stock actually gets to the like specific price level, if that makes sense. So watch out for confirmation candles and give stocks wiggle room to the upside and the downside with support and resistance. The same thing goes for stop losses and profit targets and all that good stuff. So I hope you guys learned something important in this video. Support and resistance is great when it's used correctly, but the problem is that most people don't use it correctly, and it can end up leading to a lot of, you know, bad trades, because you end up getting in at points where it's like, it's just not ideal. Just like the original Tesla example that we talked about a couple minutes ago. Like, really think about it. If you would have got in every single time Tesla broke out, you would have got burned like 3 times minimum. So it's like, keep that in mind. When it comes to wiggle room and confirmation candles, there's no exact science to it, of course. As you continue to experience trading and as you continue to practice, you will get better and better and better at identifying which candles are like true confirmation candles and like how much wiggle room to give. But as like a nice, easy way to get started, you can just look back throughout history and see how much wiggle room the stock needed in the past. So for example, with Tesla right here, we could see that the resistance level is around 200, and at its worst point, it got up to $200.79. So you could say around 80 cents. So for Tesla, you might continuously give it like maybe 80 cents to, I don't know, maybe $1 worth of wiggle room, depending on how the stock is moving for that day. So keep that in mind. Overall, I hope you guys learned something from this video. I hope this lesson really helped you guys, because it's super important. If you did, make sure to subscribe. I post brand new videos every single day. And make sure to check out this video on the screen right now. I go over another really important trading lesson that you won't want to miss.